Oh, excuse me, guys. Let me get all this set up and get all the alerts out there. Let people know that we're going live, and then we'll get started with it. Okay? I guess I could go ahead and put this on BBIG so we can watch it. We're gonna go over a couple of things today, and like always, too, we're gonna look at stocks and stuff too. Okay, just got a couple more of these to put out, and we'll get to it. Okay, I think that's got all of them out. Let me put my normal spiel in the chat here, and then we'll get started. So like always, guys, if you have any questions or anything like that, just throw them up in chat. Any tickers you want me to look at or anything like that, just throw it up in chat and we'll go over it. Give me 1 second here, guys. Let me get all this lined out here, then we'll start it. Okay, guys, sorry about that. I had a little bit of a technical difficulty there, but yeah, let me throw the stuff up here in chat, and then we'll get right into it. So if you have any questions or tickers you want me to look at, just throw them up in chat. Okay, so a couple of things I wanted to go over today, guys. There's a few plays coming up that could be pretty good. There's also some things on BBIG I wanted to go over that could make the next couple of days really good on it. And then I think we'll just look at the overall market and some tickers from there. Does that sound good? All right, so let's. I think this will go quicker if I just put you on. Follow my screen wherever I go here. So let's talk about a couple of things. What is an FTD? So I put this up in chat or up on Twitter. So if you need the link, guys, Investopedia is a great site. If you have any questions about any stock information or stock market information, this is an awesome resource. Whoever started this and whoever's helping keep it up, kudos to you, man, because it is awesome. And the link that I put up will send you straight to the failure to deliver page, but you can just click on the Investopedia up here, and it'll take you to the main page. You can search anything. But an FTD is a failed to delivered. So anytime there is a share, an option, or anything like that doesn't get fulfilled, like say, let's say that the shorts, they have to borrow the shares, right? Okay, well, if they don't return those shares, then they still owe for those shares. Same thing with the contracts. If they sell a contract and they don't deliver on those shares, if somebody wants to exercise it, they owe for those shares. They don't just say, oh, well, they ain't got the money, tough shit today. Somebody has to cover that. And that's what a failed to deliver is. It is when contracts or shares do not come through. So the new ruling is you have 35 days. That's what you see that T minus 35. That's what that means. You have the 35 days to deliver on those. So if you want to know more information, there's a lot here that covers it. But when I was talking to JP, he was saying that a lot of people on Reddit are saying, oh, well, FTDs don't matter. And that's probably because they've had dealings with them before. And there are ways to kind of kick the can down the road a little bit. But usually you don't see that with all of the failed to delivers. And BBIG is a little bit special in this area because with the dividend and everything like that coming up, from the best way I can understand that. Now, remember, guys, I'm a charting guy. I'm a technical analysis guy. I'm not the biggest person that you want to talk to when it comes to fundamentals. So, to the best of my understanding on that dividend, is if the shorts want to keep shorting the stock, then they have to pay the dividend, right? So if you have a bunch of failed to delivers, which means if you try to kick that can down the road, means you still got to hold on to all those and short, you'd still have to pay out that dividend. So in that case, at least the big guys are not going to hold on. Or at least the small guys are not going to hold on. Some of the big ones may still try to stick it out on that. And I think that's one of the reasons why we're seeing such a drop today on the stock is I'd like to see the dark pools on this coming tomorrow and the next day after that, because being my guess is some of this is probably them trying to push it down. Some of it's profit takers, some of it's paper hands, and then some of it are those failed deliveries coming through, but nobody there to pick up the stocks. So today is not the biggest day for it. So let me go back here and show you that. Here we go. Stocks area. I put this one up on Twitter yesterday, I think. But here, we'll throw it back up here today, too, so we can have it. Right. So now we have that up there, too, if you need that information. So if we look here, the red, when I talked to the guy that runs this site about, how to best read his stuff, he said that pretty much the red is unusual for that stock. It's a high volume for that stock. So if we look here, we start on the 5th, which is today, and go all the way to the 18th. But I think the last day is the 8th or 9th this week. I can't really remember. But if we go from the 5th to the 8th, we have 700,000, over 700,000 today coming through, then 4 million, then about 3.5 million, then almost another 4 million, right? And that's just in the next 4 or 5 days. Guys, that is a lot. And you can even see the price amounts over here of what that would be. So the main thing is somebody going to be able to pick up if they put those shares on the market or whatever. Is the volume going to be there? So here's what I suggest. We're not a pump and dump site. We're not. We don't want to try to pump up a stock, but I don't think a lot of people knows about this and knows about, the failed to delivers for one. Two, that if the shorts try to still stay in on those failed to delivers, that they would have to cover those dividends. And just a lot of that thing. So, guys, the people you talk to, just let them know the facts on it. Just say, hey, here's a stock that I've been looking at, or if they already know about it, let them know, hey, here's the failed deliveries coming in. Here's what happens if they do want to try to kick the can down the road. Just things like that. Because there's a lot about this that is a confluence of a lot of things coming together at one time that could be very well as long as we can keep the bullish volume going. Because without that bullish volume, a stock only moves from buying and selling. A stock don't move from any other way. So you have to have volume there to pick up these 4 million shares, these 3 million shares. That's what we got to have. So get the news out, get the facts out. Show them this video. Say, hey, watch the first 5 minutes of this video. Right? So with that being said, let me look at the comments and see if there's any questions that y'all have on this right now. Hey John, how's it going? Hey Andrew. They have to report the failures to delivers. So it's an SEC rule that says that they have to report anytime that they borrow shorts. That's how Ortex gets its numbers. Anytime that those shorts are not delivered, on both sides have to report it. On the borrower side and the person receiving them. In the case like a retail investor, it would be your broker that would have to deal with that as far as the reporting goes. So that's how they know. This guy that I talked to that run this site here, he's got a bunch of, let me see here. He's got a bunch of bots that he come up with that scour like SEC sites, S3 sites, things like that, and looks for this information and puts it up here. He's actually a really cool guy. If you ever have any questions about his sites, just go to the About page and go to Contact. I know it's mostly for like suggestions or improvements, but he'll answer any question you got. He's a really cool guy. He don't care to answer anything. Usually it takes him less than a day to get back to me anytime I've asked him any questions. Or if you don't want to ask him and I don't know the answer, let me know and I'll ask him. But this site is really cool. It's called StocksAir. Let's see, pythonanywhere.com. I put the link up on our Twitter, and you can get the Twitter handle from the header on the YouTube page. But it's at WTrades. It's DUBYA trades. Kind of like, W. Let's see, is there anything else? Yeah, the failed to deliver is whenever they have a contract or a share that they've borrowed or like in a shorts case, they got to borrow those shares. Well, then they got to return them. If they don't return those, or if you sell a put or a call, and somebody wants to exercise that, then you're on the bill to pay that up. You have to return those. So because of the AMC and GME deal, the SEC has strengthened their rules on it and said they've got the T minus 35 days. So I forgot exactly what the T means, but you pretty much got 35 days once the fail to deliver goes through to return them. And that's probably what we're seeing right here with BBIG, is we're seeing a mix of it getting pushed down, paper hands, and some of those failed to delivers coming through without the volume there to pick it up. That's the reason I was saying, it's good to, like I said, I don't want to pump anything. I don't want to look like a shield. But I think there's a lot of misinformation out there about FTDs and the importance behind it with BBIG. Like I was saying, there are certain ways to kick the can down the road for some of those shares. But in this case, if they do that, then they're going to have to pay that dividend. See, they could borrow more shares, pay off with that, and then have to just owe that next time around. But if they do that, they've got to pay for those shares that they borrowed, then pay the dividend when it comes due, and then hope to God that those shares come down low enough, cheaper than what it is now, so they can buy them back and return them. So that's a lot of hope in there, when it would just be, right now it's not that bad of a price, especially compared to where it was at. But we have a lot coming through. I threw up that site too. If you come right here, let me show you. So when you come to this page, it takes you here. Just click on the stock, and right here, click in the ticker you want. In this case, BBIG, and this is some type of trading view widget. The chart here. But if you come down on this first page, you can see here we can get the short percentage of the float. And so far, these have been decently accurate. You got to remember that they're using a smaller data source, so it may not be as accurate as something like Ortex is. They use a larger data set. But so far, they've been pretty close. And then you can come out up here, you can look at different option information, like puts that's in the money, calls that's in the money, things like that, the puts to call ratio. You can also look at short volume. Now this is just looking at the volume against the volume that's out there that's being shorted. So this is different than the percentage of the float. And then you can look right here, the last one is FTDs. And the red one is unusual volume. But I've got a couple more things we can go over, and then we can come back to this. If y'all don't have any other questions, let me see here first. Yeah, each day, the cool thing about this site is the day that it's showing there is their T plus 35 day. So that's the day that they're supposed to be coming due. Are these FTDs specific to the day they occurred? So you could add up each day and get the total number of FTDs, or so do they combine, roll over with each day with a new total? Okay, no, I think I know what you're saying here, and if I'm not, you can just let me know. But let me. So 35 days ago, you'll see right here, the date is T plus 35. So 35 days ago, these failed to delivers. They became FTDs. So they went from them owing them to actually being failed to deliver. From that point, it goes on this list. Now, at this number, if they don't cover those for some reason, or they kick the can down the road, or whatever the case may be, this number does not roll over to the next day. So this 762 shares is just for that day, and none of those shares get rolled over to the next day of this 4 million. So you can add up every one of these, and that's the amount due in total for that amount of days. I hope that's what you was asking. Also, if they cover or close their FTDs, where is that shown? To be honest with you, I'm not sure it is shown here, because technically they have to cover one way or another. So these shares get covered either by like, okay, when I say kick the can down the road, that doesn't mean that they're not covering those shares. That means that they're covering them in a way to where they don't have to buy them straight back. So they could, a couple of ways that they can do that is they can borrow more shares and pay it off that way. But then they'll just have to pay it off whenever it comes due again. Another thing they can do is they can purchase options in a certain way and exercise those and cover it that way. So it's kind of that's a really good description of kicking the can down the road because they're still going to owe for them one way or another. So, but the good thing with BBIG is with everything going on with it, if they decide to kick that can down the road, not only are they still going to owe for those shares down the road, but then they're going to owe any interest fees, any dividend payments. Because when you short a stock and there's a dividend, then you have to pay that dividend when it comes due. So while we get a dividend, they have to pay a dividend, if that makes sense. At least that's to the best of my understanding. Like I said, guys, I'm more of a chart and technical analysis guy, and this falls more into the fundamental side. I mean, there's some technical in this, but this is to the best of my understanding. Been doing this for almost 2 years now, and I've read up a lot and had a lot explained to me, and to the best of my understanding, that's the way it is. Let me see what else here. Also, okay. Does each individual open contract of the 4 million have 100 shares of ownership under them? Okay, so that I'm not sure because on these FTDs, not all those are going to be contracts, and I'm not sure if one contract counts as one of those failed to delivers that's on there, or if, like, say they have that contract and they owe 100 shares, if that's added on. I think that number, that 4 million, is just the shares in total that's owed. But I'm not sure on that. But let me make a note, and what I'll do is I'll email the guy, and I'll get us a for sure answer on that. But that's a good question, and I will make sure I get that, and I'll post it on Twitter when I have an answer. Awesome box, man. I was hoping I understood that right. So if they're forced to cover the shares within 35 days, but it doesn't mean they are closed, makes sense. According to Fintel, no shares available for short on Fintel for. Wow, so that's even, like I was talking a minute ago about that, all these confluences coming together. So that's another thing you can add to that. Just like whenever you're looking at a stock, let me go here. So if we're looking at trading this stock, we might draw trend lines, support lines. We might add the fib to it. We might look at the EMA lines. Excuse me, I'm losing my voice a little bit. We might look at the MACD, and each one of those is a check mark, right? So it's hit the trend line and bounced, check mark. It hit the support line and bounced, check mark. It's up over the 50-day, check mark. The 15 has crossed the 50, check mark. The price is over the 200, check mark, right? So that's another check mark. If there's no shares available, or if the cost is through the roof, that's another check mark for us on those on the FTDs. So you have the fact that there's no shares, or it's outrageous to purchase any shares right now, check mark. You have the fact that the failed to delivers are due, check mark. You have that dividend payment that they'll have to pay if they decide to hold on, check mark. So those are just check marks that even strengthens the argument even more. So the more, just like with anything, the more shit that you have that adds up to that, if you got a guy that just robbed a bank and one person's out there pointing at him, you might could say, well, maybe they misidentified him. But if you got 50 people out there pointing at him, being like, yep, that's for sure the guy, dude's going to jail, you know what I mean? Dude's fucked. Sorry, I didn't mean to cough. No, that payment of dividend, that would be something that would have to come due. The way that they kick the can down the road with the shares is pretty much just purchasing shares a cheaper way without actually buying them back from the stock. So they might either borrow the shares back, but in this case it don't seem like they can, or they might exercise a contract that's in the money, something like that would be cheaper than just straight up buying them. I'm sure they have some other ways that I'm not thinking about, but but that dividend is something that comes due regardless. And if the thing about these fail to delivers and dividend payments and stuff like that, if they don't make those, or they don't cover in one way or another, then that's margin call time, which is even better for us, because whoever margin calls them is going to take those shares, throw them out on the market, let people purchase them, and that's what we want in the first place. Yeah, guys, anytime, if y'all got a specific thing y'all want me to hit on, just let me know and I'll gladly go over it. This is my favorite type of live stream, answering these questions and going over all this stuff. Now the on you're talking about the NOAA, this right here, right? Sell side imbalance at opening and closing. This, I'll be honest with you, on this stuff. I don't know a ton about it. I've only actually been looking into the on balance stuff for a couple of months now. I don't. I can look into it more and probably get you some answers on it, but I'm just not that strong on the NOAA 2 stuff. I've just never used it that much, to be honest. Hey, thanks, Green Man. By the way, guys, let me throw this out here again and thank everybody. We have John, Andrew, Box. Who else we got? I don't want to miss nobody. And Green Man. Guys, appreciate, I love the back and forth. I love the fact that you're answering these questions. On balance volume went down. It means that people sold. If it stays up, that means people hold. Is that true? Let me do this. Let me double check the on balance stuff for you, and let me get back to you on that, because I don't want you leaving without any answer. But it's stuff I would feel more confident about if I could look some stuff up about it. Okay, yeah, I know you, Chewbacca. That's cool. Yeah, I'll post it on Twitter and the Discord, guys. Okay, so dark pools. I don't know a ton about them, but I know enough. So pretty much what happens with a dark pool, there's a few ways that they can move them, and I'm pretty sure that I'll miss a couple of them here. But with dark pools, what they end up doing is, let's say a market maker once they're short in the stock too. That's the reason why it's so shitty that Citadel is a market maker and a hedge fund too, because they get to do what they want to with those shares and how they're run through. But let's say they want a stock to go down, right? Okay, so what they'll do is all of the major buying stuff that might send a stock going up, they'll hold back and send through a dark pool or the OTC market. Now, this was originally meant for big guys to make purchases that way so that they wouldn't affect the stock market in a big way. I mean, if you got one whale coming in buying millions of shares at one time, it could affect the stock market in a way that might be considered manipulation. So that's what it was originally meant for. That's the whole reason why there's dark pools in the first place, and why they're somewhat legal. But hedge funds realize that they could use them to manipulate a stock to go down. So they'll take that, they'll take those shares that might send the stock up, and they'll send it to a dark pool. Now, if it's a U.S.-based dark pool, they can only move it for 24 hours. Now, they might have other ways of shifting it around from there, but the dark pool itself can only be moved for 24 hours. If it goes internationally, it can be moved for up to 48 hours. So they could send those to the London Stock Exchange. That would have to be come back and sent back to us, and that could take 48 hours to go through. While at the same time, they're sending through all the sell stuff that's pushing the stock down. And they're using algorithms to do this. That's the reason why you'll see this funny looking stair-step motion down sometimes. If you see this perfect stair-step motion down, that is a large hedge fund like Citadel that's also a market maker using an algorithm to push the stock down. Guys, I know this sounds like conspiracy theory stories and shit, but this has been proven. They are videos out there that you can watch from known people that used to work for these hedge funds that are talking about this. They're pretty much whistleblowers. As a matter of fact, there's one video going out there to where they're bragging about it before all this shit started happening. It's from a few years back, where they're bragging about it because it's pretty much legal. But yeah, it's crazy what they can do with these dark pools. And I'll tell you what, I'll look up a couple of those videos and I'll post them on Twitter for you. And you can make up your own mind whether you want to believe it or not. But they're actual workers. One of them has Ken Griffin himself and another guy that used to work for him talking about them so openly because technically it's legal up to a certain point. That's the reason why there's a part of the apes that are more than just doing this for the squeeze. There's a part of the apes that they're pretty much activists. They're trying to get these rules changed. Now me, I hope they get changed. I'm not part of that group because really I need the money. This is one way that I feed my family. But I wish them the best and hope they get things changed in it. I'm a little mixed on the payment for order flow because I'm afraid that might mean that this non-commission trading could go awry. But, maybe it's just more research I need to do into it. Because I do know that there are brokers out there that are doing non-payment for order flow that are free. Look there, starting to get a bump. Yep. When me and JP was talking earlier, trying to think about, when are these FTDs due? Okay, it says that day, but is it before the bell opens, sometime during the day, or in the aftermarket? And I think we come to the conclusion that they had to be due up until whenever buying stops for the end of the day. Some places that's 4 exactly. Other places you can buy up to 7 or 8, I think. I think Webull lets you do it up until about 7 o'clock, as long as they're limit orders. So I think that's when it is. It's at the end of the day when all the buying has ceased. It has to be due by that time. Some of the other things I wanted to give y'all a heads up on, guys, is Tilray. Tilray has earnings coming up on the 7th. It's at the end of the day on the 7th, and that's not Tilray. It's at the end of the day on the 7th. So this is going to be one to watch. I've actually already picked up a couple of calls. Not many. I just picked up 3 for right now. And what I'm going to do is I'm going to wait and see what it does. If this skyrockets before earnings, then I'm going to sell before the end of the day on the 7th. But if it only goes up a little bit or not at all, then I'm going to purchase more right at the end of the day on earnings day, because I'm pretty sure it's going to beat earnings. From everything I'm seeing, it's been making money. It's beat earnings consistently. So I'm pretty sure it's going to beat earnings. And the reason why I would sell before earnings is because if it runs up, it's probably going to be a buy the rumor, sell the news thing. As soon as earnings comes out, they're going to sell off. But if it stays consistent or just goes up a little bit, that means it's probably going to shoot up after earnings. People are just waiting pretty much. So that's the way I usually play earnings. I'm bullish on. But I think overall this one is probably going to be doing pretty decent this week. Also, guys, keep an eye on energy and oil stocks. Now, they're already pretty up there right now. So be careful if you're trying to go long or even longer swing plays. But they might be worth making some money on the short run on them. Also, crypto things like BT. Look, it's killing it and probably will for a couple of days. Mara, killing it and probably will for a couple of days. I actually bought in on Mara today. Hut, killing it, probably will for a couple of days. Hut is one, it's a slow burner, and it's probably best for options on it, just because of that fact. But look, it's been doing really good. We had the 15 over 50 cross, we had the price above the 200, and it just consistently bounced. Even if you'd follow my strategy, sold off under here, you would have been up, and then bought back in when it crossed again, you'd be up again. And wouldn't have wasted a day trade on it too, by the way. Some of the others that you might want to keep an eye on is some clothing stores. American Eagle Outfitters is one. And the reason why this one is because of Levi. It might be trading in sympathy with it. Levi has earnings this week, and it didn't do, misspelled it. It beat earnings last time, but they was worried about the outlook. I'm pretty sure that's the way it went, as far as I remember. And that's the reason why it sold off and went down. But they're expecting it to beat again this time, which would mean that the outlook was wrong about it, and you'll probably see it shoot up pretty good. So watch American Eagle Outfitters and Levi this week. Disca is bouncing up again, and I think that's because the market is going back risk on. If we look at the advancers and decliners, there's a lot more advancers and decliners, which means the market has now went risk on. So people are taking that risk. I don't look for it to shoot up. I don't think this is the time that it's going to break out, but there's plenty of room to swing here. Even if it only goes back up to the 200, that's another $1, which is good for options. But I look for this to get back on track with this bouncing right in here. So between this, what is it, $27.30 to about $30, $31. What else is there? There's another cheap one on here. Right here. GTE. Guys, watch this one. This could be another CEI. But, you know, we thought FAMI was too. So, this one is one to watch. And if you play it, make sure you have stop losses. Make sure you watch it and keep an eye on it. But it's an energy stock and it's doing pretty killer. And this one could easily go over $1. As long as the energy stays bullish, I could see this one going to $1.50 to $2 pretty easy. But if the energy starts slacking off, this will too. You see AMC. Yeah, AMC. We had that small little breakout here and here, but then it's back under the 200. I think what's going to happen with it is it's going to come back down and test this 33 mark. Well, somewhere between 33 and 35 and bounce. That's what I'm guessing now this. And I played puts on this day, and I may play puts again on it because I do think it's going to come down and bounce before it takes off again. Usually with AMC, it trades about like crypto does. You'll see it bounce off support, go up, come back down, bounce off support again, and then take off. So let me go back to BBIG and see if there's any questions y'all have. $5.30, yeah. Somebody else mentioned $5.32. I think that's what, when the options close, right? Yeah, these stocks I mentioned here, and my watch list in general, guys, they're not meant to be taken long. If you want my long picks, I put them on Twitter in a separate video for them. Or, well, not long, but longer swing trades. Right now, I'm not going technically long on anything except for what I've already have. But there is 3 stocks that I did put out a video on, or maybe it was 4 stocks. I put out a video on that I would go long on if they started rebounding again, and that is Square, Apple, CLF. Oh yeah, CLF is doing good too, guys. I'll show you that one. Shit, what was the other one? I don't remember it now. Oh, Roku. Yeah, I can check that. Let's see. BCTX. BC. I think we've talked about this in a couple of times. So I may have some stuff already on it. Let me see what they do again. Oh, therapeutic company. Okay. Okay, so here's the thoughts on it. This is the 15-minute chart, and this is your 4-hour chart. So overall, on the 4-hour, it's trending up. It's good. It doesn't look like a pump and dump, but it does look like it does have rallies from time to time. Now, this trend up is good, and you have the sell-off. That's good. It sold off around the same time as the market did, and if you look, you even have a double top right here. So that means it would probably pick back up with the market too. So this is probably at a deal, at least on the longer swing to long on it. The shorter looks a little bit different, and I'll explain that right here in a second. But if it bounces at this 200, or if it does go under, it quickly recovers and bounces. That would probably be a good little point to buy in on it. What I would probably do is wait for it to bounce off the 200 and get over the 50-day. And it would be probably more, you don't have to wait for this, but it'd be more bullish if you've seen the 15 over 50. That's the way I would play it. I would wait for the bounce and for it to get back over the 50-day. That would put you, let's see, by the time it gets there, that would probably put you about $7.78 to about $8 even, give or take. And you're looking at up to $9.60 if it returns, but I'd say if you're asking about this the way it's looking, you're probably wanting to go a little bit longer on it, so you're probably waiting until it gets up to about 10, 11, 12, something like that. Okay, so I told you the shorter time frame looks a little bit different. Now, if we're talking about playing it shorter, anything from a day to maybe 2 weeks, then the same thing still goes for here. Look at these support lines for it to bounce around. Then you'd want to see the 15-day crossing over the 50-day EMA line, and then you'd like to see the price be over the 200. I have a video on the channel about it. It's called My Strategy Using EMA Lines. It's a really good strategy and it works pretty decent. But yeah, I would wait for this to get up over the 200 and have that cross. It'd be even great if it had what they call the golden cross. That's when the 50 crosses over the 200. But if you see it get rejected by this 200 again like it did here, count on it to go down a little bit further. The 200, probably by the time it gets there tomorrow, it'll be between $7.74 and $8. Yes, John makes a good point, guys. This is not, I'm not a financial advisor. These are my opinions, and if you buy or sell anything, that risk is on you. Look, the risk is yours, so the choice has to be yours, right? I can't make these choices for you. All stocks is best guess. It is trying to make an educated guess with the limited data that we have. And so far, this stuff that I've been using seems to work out pretty decently. I've been working on a video where I took a Robinhood account that had less than $100 on it, and I'm trying to get it over $1,000. I've been at it for about 2 weeks now, and I'm over $400 from under $100. Now, I've been real conservative about what I try to buy, but I've been risky at the plays I've been making, if that makes sense. So I've not been buying like 5 or 6 contracts. It's been 1 or 2 contracts with riskier plays that I wait for the perfect setup on. You got any other tickers y'all want me to look at for the close of the day? Also, the SPY. I look for the SPY to cool off, and then maybe even cool off a little bit more in the morning, and then bounce again. But tomorrow I'm not going to play the 3-time leverage one here, the SPXL. This is the one I have been playing, mainly because where it's at right now and the way it's bounced, it has stayed up pretty high. So I'm going to play the UPRO one. It still may be leveraged, I'm not sure. Let's see. Yeah, it's the Ultra Pro, so it's leveraged to an extent. Ooh, excuse me about that. But you can see that the options that I checked here later, the theta's still not great on them. So these are, on these leveraged stocks, you don't want to hold them more than a day or two. It's best if you can hold them less than a day. The longest I've ever held one has been 3 days, and I didn't make near as much as what I could have. The only reason why I held it is because it kept hovering around this one price, and I wasn't making much on it, but I wasn't losing much neither, so I just held it until it made money. But most of the time, if I hold one of these, it's only overnight. And I'll buy it, and during power hour, hold it overnight and sell it the next morning. And that's just so I don't have to use a day trade. If I had unlimited day trades, I would only day trade this stock. But if UPRO or SPXL is a little costly for you, a couple of things you can do, but you want to be bullish on the overall market, is you can go to SPXS. Now this is the inverse. You can buy puts on this one, which means if the stock market goes up, this goes down. and you can get them cheaper that way. Or you can go to SQQQ, which is the inverse of the NASDAQ, and do the same thing. You can buy puts on this one, which means if the NASDAQ goes up, this one goes down. So those are just different ways of buying the S&P or NASDAQ without paying a shit ton of money trying to do it. See, look, it's going to come down and test where it's been running hot all day. Let's go back to the SPY. It's been running hot all day, so it's going to come back and test this 50 or 200 and bounce if it stays bullish. If it goes under that 200, look for it to go bearish again. But I'm overall thinking that it's going to continue at least up a little bit more. We do have the double bottom. We do have the 15 over 50 split and the price over the 200. We do have it right up against resistance, which means it tested it, it's getting rejected, it's going to come back and bounce and try to test it again. Oh man, yeah, I guarantee if let's look right here. Let's adjust that one just a little bit more. So yeah, look, both of those, even though I went with the candles, they're going to hit right around that 50 and 200. Let's see what happens tomorrow. But guys, like always, you know, I appreciate you coming out and hanging out with me during Power Hour, and I hope you come back tomorrow. If you got any questions, hit me up in the chat or at Twitter or one of the Discords I use. But if you find value in what I'm doing, hit that like and subscribe button. Guys, it'll help get me out in front of more eyes. It'll help deal with YouTube's weird algorithm, and it'll show them that y'all appreciate what I'm doing, and it'll get me out on more searches and more eyes. So if it's not too much trouble, I'd appreciate it if you would hit that like and subscribe. And go over to Twitter at WTrades. It's DUBYA Trades. And follow us over there. Guys, I post charts, videos, news, all that stuff. It's a great place to keep up with stocks and the community in general, right? So, you know, if it's not too much trouble, it would greatly help me out. And I appreciate you coming and hanging out here with me. Let me see if there's a couple more questions before we end the day. Do y'all have anything else you'd like for me to check out or look at for you before we go? Yeah, CGME's the same way. It's going to probably come up and get rejected at just 200. Look for it to probably come back down and test support again. Probably somewhere right here in this box. It's probably going to bounce right around this trend line and keep going up. We can get rid of these since it broke that. BBIG. Yeah, look. Oh no, it's BlackBerry again. Damn it. Let's get rid of these. Yeah, see, look, it keeps hitting right around this support line. Guys, that's good for when technical traders see that around 569. They see that no matter how much it gets knocked down, it keeps hitting around the support line. And that's always a good sign that it could hold up. We just need it back up over that 200. Get more eyes on it. Hopefully if we can get enough bullishness going in on it. As a matter of fact, let me go ahead and tweet that. The failed to delivers. That way, like I said, you know, just let people know the facts. And guys, use those hashtags, they work. Alright, let me see if y'all got any questions here. I think so. You know, of course it's talking dip a little bit, but as long as it recovers, then you still can say that it's around that support. So I think we're right there at that support. What's really going to make a difference is, do we have the eyes and the bullish follow through to buy up them shares that are coming? That's what's going to be the question to be answered tomorrow and the next day. So just put out the facts, let people know. And guys, I appreciate it. I got to go get my kids from the bus. Like always, I greatly appreciate y'all coming and hanging out with me during Power Hour, and I hope to see you again. And John Bub, I appreciate all the help you've helped out today in chat. Thank you.